The following podcast is recorded and produced by Emerge, a media creators co-op.
Good afternoon, ladies and gentlemen. Welcome to the Defion Productions podcast. I am your host, the hardest working nobody in Bitcoin, Don, and this is our brand new time of filming. We are going to be filming every single week at this time, Monday, 6:30 Eastern Standard Time. Taking a hiatus from our Thursdays at 3, seeing if maybe we can do this prime time slot at 6:30. We'll jump into the charts because there's a lot of action going on in the markets. We got Bitcoin sitting at 106,212 for all you chart TA guys. We bounced off the 50 EMA yesterday, which was important to keep the bull market structure intact, so they say. And we're sitting up about, in the last day, almost a percentage and a half. Ethereum, 3,500. The total market cap of crypto at 3.57 trillion. Fear and greed index at 29. Fear. We're trucking along here with the potential cycle theory. Maybe out of what we've been saying that we think that we broke cycles. We're going to see fairly soon. We're right in the point of the cycle now where you would see parabolic moves. We haven't seen that as of right now. However, we've had some wild price action yesterday. We had some news the day before. We had some news with our President Trump talking about potential stimulus checks, which we know is injection into liquidity for our markets. And we also had him the day before talk about 50-year mortgages. And we're going to talk about both of those things and more today. I have some education that I would like to do that we're going to start with. I think I lost internet again, so let's try to get that back. There we go. I think we lost our prices here. There we go. Back on the internet. I'm going to start with a video that I have here that's about 12 minutes long, and I want to share my thoughts. And this is a breakdown that talks about how inflation really works and how it affects markets and how it affects the prices of goods and services. And I think that it's a good place to start for a conversation about why President Trump's stimulus checks, why President Trump's 50-year mortgage stuff is not a good thing for our economy. And this will break it down. I'm going to show a couple minutes of it and then chime in on this video so we can have a conversation. Rich, I'm kind of curious to see what you think of how you view some of this stuff as well. So let's press play and then we'll chop it up.
Stretch the way it used to. You're not imagining it. You're watching the quietest transfer of wealth in human history, one that repeats every generation. Because inflation doesn't just make things more expensive, it rearranges who owns the future. Welcome to The Financial Historian, where money, power, and history collide, and nothing is ever as simple as it looks.
We're losing internet.
Apologies, we're having Wi-Fi problems. I feel like the internet's okay, but it's the Wi-Fi that we're having problems
Yeah, I'm
with.
trying to hotspot it so it doesn't...
For most people, inflation feels like chaos. Prices out of control, savings eroding, the system slipping. But for the powerful, inflation is order. It's how the modern economy keeps itself alive. It's how governments pay for wars without raising taxes. It's how corporations erase their debt. And it's how the wealthy watch their assets multiply while everyone else scrambles to keep up. So the question isn't why inflation happens, it's why it's allowed to happen again and again. To understand that, you have to go back to a time when inflation was treated like a national emergency, not an economic target. In the early 20th century, most major economies were tied to gold. Every paper note was backed by metal stored in a vault. That made money scarce and stable. It also meant that governments couldn't print their way out of mistakes. If you ran a deficit, you either raised taxes.
So I want to just stop real quick to kind of talk about that. Gold backing the dollar actually made dollars scarce because of the scarcity of gold. So that's a vastly different concept than how we view money today, with perpetual printing and the unlimited supply that we have of dollars in our economy. But back then, dollars were considered scarce because the asset backing the dollars was scarce. I just wanted to point that out.
Or admitted defeat. Inflation, when it happened, was usually the product of war or collapse, a loss of discipline. The idea that a government could choose inflation on purpose would have been unthinkable. But then, everything broke. The Great Depression in the 1930s shattered the illusion of monetary restraint. Prices fell, wages collapsed, banks failed. The economy froze, not from inflation, but deflation. When money gained value over time, nobody spent it. Debt became heavier by the day. It was an economic death spiral, and it changed everything about how policymakers thought about money. By the end of World War II, inflation had transformed from a fear to a tool. Governments emerged from the war buried under mountains of debt, some owing more than 200% of their GDP. They couldn't pay it back honestly, so they didn't. They let inflation do the work. Through the 1950s and 60s, global debt quietly shrank, not because nations grew richer, but because the value of their debt melted away. $1 trillion of war bonds didn't mean the same thing 10 years later. The system learned a lesson. Moderate inflation could solve impossible problems without anyone noticing. Then came 1971. President Nixon closed the gold window, ending the dollar's convertibility to gold. It was supposed to be temporary. It became permanent. And in that moment, money stopped being a measure of value and became an instrument of policy. For the first time in modern history, the world's dominant currency wasn't backed by metal, but by confidence. You couldn't exchange it for gold anymore, only for more dollars. Inflation was no longer a symptom. It was a design feature. From that point on, the rules of the game changed. Money could be created in infinite quantities, as long as people kept believing in it. Governments could borrow without limits. Banks could expand credit endlessly. And investors learned that as long as inflation stayed managed, the real winners weren't savers. They were borrowers. Because inflation quietly flips the logic of money. If you hold cash, inflation robs you. If you hold debt, it rewards you. Every year that prices rise, the real value of what you owe goes down. $1 million mortgage today might feel crushing. But in 20 years, after steady inflation, that same debt feels lighter. Meanwhile, your assets, your...
Really quick, that's kind of the logic of the supporters of Trump's 50-year mortgage idea that we're going to talk about in a little bit later on in the show. The idea that, it doesn't necessarily matter how much debt you're taking out today because it's going to be deflated, the price of the dollar is going to be worth so much less in the future that it's not going to matter as much. So we'll talk about that idea when we talk about Trump's 50-year mortgage plan.
House, your stocks, your land, all rise in nominal value. Inflation doesn't just shrink debt, it amplifies wealth. That's the paradox at the heart of the system. The same force that destroys the poor sustains the rich. And it's not a conspiracy. It's arithmetic. Inflation is the mechanism that lets a debt-based economy survive. Without it, every dollar owed would have to be paid back in dollars that hold the same value they had when borrowed. An impossible task when the system itself is built on credit expansion.
Another quick thing too is we've reached a point in time where there's more debt than actual dollars. So it's impossible to pay back all the debt. That's what happens in a debt-based Ponzi scheme. All the outstanding debt represents more than the actual dollars that are in the system. So you can never actually pay off the debt.
So governments, central banks, and corporations quietly agreed, better to let the currency lose a little value each year than let the system collapse entirely. But what happens to the average person in this arrangement? The answer is simple and devastating. Wages rarely keep up. Prices rise faster than paychecks. Savings, once the cornerstone of middle-class security, become a slow-motion loss. And the people who can't afford to own, who live on earned income rather than capital, find themselves running on an invisible treadmill that never stops. Because inflation rewards ownership, not labor, and it punishes caution.
That's super important right there, what they just said. Inflation rewards ownership, not labor. So our inflation is tearing away at the fabric of our middle class, like we've talked about on this podcast many times. And the people that own assets are rewarded in an inflationary system. The people that work hard and save dollars in a bank account get decimated, which is wild because, 3 generations removed from the Great Depression, when people were saving money under the mattress, there's still a segment of the population that believes that, cash is king, and just putting money in the bank or putting money under the mattress or putting it in a safe at your home is the way to go. And it's just not true.
It turns thrift, once a virtue, into a liability. The system tells you to save, but penalizes you for doing it. When your bank offers you 3% interest, but inflation is 6%, you're not earning. You're paying to keep your money still. Meanwhile, the people who borrow at 4% to buy property see their asset values climb by double digits. That's not market luck. That's the design. Inflation doesn't redistribute money randomly. It redistributes it upward.
There's another important caveat. It doesn't redistribute money. It redistributes it upward. So the people that, and it's going to talk about it, I believe, in a minute or two, the people closest to the money printer benefit the most from inflation.
The people closest to the source of money, banks,
There it is.
governments, corporations, get it first while it still holds value. By the time it reaches you, it's already diluted. It's called the Cantillon effect, named after an 18th century economist who noticed the pattern 3 centuries ago. When new money enters the system, it benefits whoever touches it earliest, before prices adjust. Back then, it was kings and merchants. Today, it's hedge funds and central banks. Inflation doesn't just change prices, it changes who gets to live above them. After 1971, the logic of money flipped for good. What once punished overspending now rewarded it. What once disciplined governments now liberated them. And as credit replaced savings, inflation became the quiet glue that held everything together. By the 1980s and 1990s, the system had perfected its balancing act. Central banks promised price stability, aiming for roughly 2% inflation, just enough,
Which we know is absolute bullshit.
to keep the economy expanding without the public noticing the silent tax. 2% sounds harmless, almost scientific. But over a generation, it cuts the purchasing power of $1 in half. The difference is that while ordinary people see their grocery bills double, the rich see their assets double.
So what they just said is 2% inflation over the course of an average person's working lifetime will cut away at your savings by 50%. So you're losing 50% of the value of your buying power over the course of a normal middle-class working lifetime just by inflation. So you have to outpace inflation, eating away 50% of your buying power before you even worry about what assets you're going to buy and how you're going to outpace regular gains. Right off the muscle, you're losing 50%.
Two, and then some. Because when inflation is steady, debt is predictable. And the rich don't fear inflation, they own it. They own the houses that appreciate, the businesses that raise prices, the stocks that adjust upward. They own the debt that gets cheaper to repay every year. Inflation is their business partner, a silent co-conspirator that magnifies every advantage. Governments love it too. Public debt becomes smaller in real terms the longer inflation persists. That's why they'll fight deflation with everything they have. Deflation exposes fragility. It makes debt heavier, exposes bubbles, forces defaults. Inflation does the opposite. It hides the cracks, fills the gaps, and quietly transfers pain down the pyramid. And the bankers? They love inflation most of all because it guarantees a world that can't stop borrowing. If prices are always rising, saving is irrational. You have to invest. You have to.
You see that part right there? Where it says, if prices are always rising, saving is irrational. You have to invest. Unfortunately, a large sum, it's right on the screen right there. It says, if prices are always rising, saving is irrational. You have to invest.
To chase yield. And every chase means another loan, another product, another derivative. The entire architecture of modern finance, from mortgages to bonds to stock buybacks, relies on the assumption that tomorrow's money will be worth just a little less than today's. The problem is, the further down you are in that system, the less control you have over it. When you live on wages, your income adjusts slower than inflation. When you live on assets, your wealth adjusts faster. And when you live on debt, inflation either crushes you or makes you rich, depending on what kind of debt you hold. A credit card balance is poison. A fixed-rate mortgage is leverage. The rich know the difference. Most people don't. That's how inflation turns knowledge itself into capital. Then came 2008. The global financial crisis should have been a reset, a moment to rebuild something honest. Instead, It became a masterclass in controlled inflation. Central banks created trillions in new money to rescue the system, not by handing it to citizens, but by pumping it into banks and financial markets.
That part is super important. The great financial crisis saved banks, pumped money into the banks, not giving money directly to the people who were the ones that were most affected, the middle class Americans that were losing their homes, that were losing their jobs, that couldn't pay for things, went to the banks, and the banks did what the banks do.
Asset prices recovered overnight. Stocks and property soared. Wages did not. Quantitative easing, the technical term for printing money through bond purchases, made it sound like a technical fix. It wasn't. It was a historic redistribution of wealth through asset inflation. Those who owned thrived. Those who rented waited. It wasn't corruption. It was policy. Then, in 2020, the cycle repeated, this time under a global pandemic. Governments injected money directly into households to avoid collapse. Demand exploded while supply chains broke. Inflation surged higher than it had in 40 years. And once again, history rhymed. The stock market hit record highs, real estate became unaffordable, and the same people who benefited from low interest rates now profited from scarcity itself. For a moment, the public thought inflation was back because of greedy corporations.
Super important right there, what he just said, because politics and the bipartisan political climate that we're in make you believe that greedy corporations are the reason why the prices of goods and services have gone up. But here's a good explanation of what's really going on.
But that wasn't new greed. It was the same greed the system had rewarded for decades. They were just better at the game, because inflation doesn't choose its winners. It simply amplifies whoever already has leverage. Look at any major inflationary period in history, the pattern repeats. In Weimar Germany, the middle class lost everything, while industrialists who held real assets emerged richer than ever. In post-war Britain, inflation quietly wiped out the national debt, while savers saw their pensions eroded. In 1970s, America, stocks stagnated, but real estate and commodities made fortunes for those who could afford them. And in the 2020s, the richest 1% gained trillions, while the median household fell behind. Different eras, same formula. Inflation is the oldest wealth transfer on Earth, and the most respectable one. The public blames greed, politics, supply chains, but those are symptoms. The root cause is structural. We built an economy that depends on credit expansion, and credit expansion requires inflation to survive. The alternative isn't stability, it's collapse.
You hear that? The alternative is not stability, it's collapse. The only way that we solve this problem is to allow the system to collapse. So the talking points that you hear about taxing the rich, more money, and all these progressive thoughts of socialist policies, they don't work because the system is set up in such a way where it's going to continue to just do what it does. Unless you change the system or allow it to collapse, none of this stuff will change. It's not Republican, it's not Democrat. It's literally built in the code of our system. This is how it goes. This is what inflation does. This is all by design. It's not the Democrats. It's not the Republicans. People come and go in these positions in government. This is the system that's been operating for almost a century, since the creation of the Federal Reserve in 1913, only exacerbated by 1971.
That's why even when central banks talk tough about fighting inflation, their real mission is never to eliminate it, only to control it.
Super important. When you got Jerome Powell coming up to the microphone and talking every single time that he talks his Fed minutes after a Fed decision, and they're talking about taming inflation or addressing inflation, like they have absolutely zero desire to eliminate inflation. He always talks about the 2% target. So as we talked about a couple of minutes ago, that 2% target erodes 50% of an average worker's buying power through the life of their working years. So they're aiming by design to wipe out 50% of your buying power. When it goes to 3%, that's 50% more destruction. So that's 50% more of your buying power that erodes if it's at 3 instead of 2, because 3 is 50% more than 2. So every time it's above 2, you're eroding multiples more of your buying power. So imagine how much buying power was eroded from 2020 until 2022-23, when you had back-to-back years of 9%, which is what they told us, but it was probably double digits. So if 2% erodes 50% of our buying power, what is 10% eroding?
To make it feel like stability while the currency quietly erodes beneath your feet. Because if inflation truly went to zero, growth would stop. the machine would seize. And so the war on inflation becomes a performance, a delicate dance between credibility and necessity. The Federal Reserve raises rates, markets panic, and then, just before something breaks, the tide turns. Because deep down, everyone at the top knows a little inflation is a small price to pay for keeping the illusion alive. But there's something deeper than policy here, something psychological. Inflation doesn't just change numbers, it changes behavior. It teaches people to consume now rather than plan later. It punishes patience. It rewards risk.
So inflation punishes patience and rewards risk. That's why you see our stock market and our trading full of all these degenerates with leverage and doing all these risky behaviors while they're trying to quote unquote invest, because the more risk you take, the more you're rewarded in our system. If you're not taking risk, you're not rewarded. If you're not investing, you're getting plummeted. And it's all because of inflation. It all comes back to the debt-based dollar Ponzi scheme, which is the U.S. fiat system, all based on inflation continuing to erode away your buying power by design. Our system has zero desire to ever eliminate inflation. When you talk about, you hear people talk about inflation being a problem, it's only a problem because it got too high, not because it exists. Inflation will always exist, and that's by design. So we'll go back to the video here.
It turns saving into fear and speculation into hope. In doing so, it creates the perfect citizen for a debt-driven system. Always spending, never satisfied, and perpetually chasing security that can never quite be caught. That's how inflation becomes a culture. We call it growth. We call it prosperity. But underneath, it's the same mechanism that's been running for centuries, a quiet cycle of devaluation, reinflation, and rediscovery. It keeps empires solvent, banks liquid, and the public docile. And once you see it, you can't unsee it, because inflation is not random. It's how power measures time. It rewards those who live in the future, the ones who borrow, invest, and manipulate the flow of credit. It punishes those who live in the present, the ones who earn, save, and spend what they have, and it forgets those who live in the past, the ones who still believe money holds its value. That's why the rich love inflation, and you don't, because to them it's not theft, it's strategy. Every generation learns the same painful truth. The value of money is never fixed. The only question is whether you're the one losing it or the one deciding what it's worth. Inflation didn't appear out of nowhere. It's the natural consequence of a world that wants everything now and pays for it later. It's the quiet engine of debt, the fuel of empires, the lifeblood of a system that must always expand, even at the cost of the people inside it. And yet, here's the paradox. Without it, everything collapses. Deflation destroys borrowers, crashes banks, and freezes trade. Inflation keeps the gears turning no matter who gets crushed in between. That's the moral equation of the modern economy: growth at any price. So the next time you hear that a little inflation is good for the economy, remember who it's good for. Not the worker saving for a house, not the retiree living on a fixed income, but the ones who already own the house, the ones who built the system to make sure it never stops rising. Inflation isn't a glitch in capitalism. It is capitalism, just running at full speed, uphill, with your wallet in its pocket. Because in the end, inflation is not the fire, it's the oxygen. And the world we built can't breathe without it. If this gave you a new perspective...
I want to give a shout out to the channel. Financial Historian is the YouTube channel that created that video. That's the if you really like take a step back, that's why Bitcoin was created. They can't stop printing. They will have to continue providing liquidity into the economy, and inflation will continue to run hot. Asset prices will continue to go up. If you're not buying assets, you get left behind. And Bitcoin is the scarcest asset ever created, and money is flowing to that asset, which is why it's worth six figures 17 years after its existence. What did you think of that video, Rich? What are your thoughts?
Yeah, I mean, it's pretty. There was a couple really good lines in there, specific things that I think make you think about, some of the stuff like that one line about, if inflation's so high, it's not worth saving money because you shouldn't put it in something where you got a better sense of return. That's why, like people always talk about their savings account. And I'm like, but you're better off. I'm trying to think how to say it. I'm not saying you're better off spending. You're better off like
Taking risk.
doing something.
You're better off
taking some
taking
risks. And doing something better with the money, so that you're able to. Like, it's the same. Like it's the same rationale. Like, like I'm 58, so my Social Security. Like they're like, should you? Everybody's like, oh, wait till 67. I'm like, no, because I don't have a lot of faith in Social Security. And B, like, no, I don't know how long I'm going to live. So why would I waste 5 years? Well,
money
you'll get
has
less.
more value today than it does tomorrow.
When I'm 78, let's say, I'm 80, what am I doing with the money? No, I'm young now in my mind. So like at 62 or whatever it is, I'm gonna use that money when I can. I'm going to do
here's
things
the thing
with
that
it.
they don't tell
Whether
you.
I decide to do it and put it in a fund for grandchildren if I have them, whatever, I'm going to do something with the money. I'm not letting the government sit on my money for an extra 5 years.
Well, you're taking the money at 62 or maxing it out at age 70, right? And we just learned that inflation is rising 2%. That's what they're aiming for.
Right.
So the money that you're getting later on isn't going to have the same buying power as it would if you just took it the day that you turned 62 or 62 and a half and started getting the money.
Yeah, I mean, like there's other, your investments are different. Your investments are, like in my case, my investments, I know what my plan is for my investments because I'm going to need that money when my pension doesn't go as far or, down the road. But I'm also not like, I'm not waiting to do things. The things that I want to do, I'm doing them now. Like I'm not going to, like, not, because I know that like the money that I'm bringing in, even my pension money, I know with inflation that I'm getting this, but I know that it's worth less and less and less and less and less. So why? So if I want to go on a trip, like in 3 years, that trip is going to cost me significantly more, but I'm pulling it from the same amount of money. So I understand that the inflation people don't understand this. Like even when they say, inflation is basically zero. Like I don't think that's ever been the case. I don't know when that is.
No,
Is
it's
it ever
not.
really been? No, but they act like the president says it on a regular basis. It's basically
Because they're
nothing.
manipulating words. Because people are uneducated financially, and they can say things like that, and people will believe it.
I don't know. It's a good video, and I wish more people would pay attention to. This, like before we got on the air, we talked about two things about financial literacy that just people in this country, like 80% of the people are so wrapped up in who they think is their superstar politician. They have no concept of how much they're being manipulated.
Yeah. And this goes into our two major stories that occurred over the weekend that we're going to talk about. The first one happened on Saturday when Trump tweeted about a 50-year mortgage proposal. He talked about making housing more affordable for people, and his solution would be, it was actually Bill Pulte that tweeted it and tweeted, I think, Trump's Truth Social post potentially, and talked about 50-year mortgage over a 30-year mortgage. We have some numbers that we're gonna present and just allow the numbers to kind of speak for themselves and let people land where they will. Quick numbers on the 50-year mortgage. Start with 80% of the median house price. I believe the median house price in this country is somewhere around $415 or $420. 5% interest, near long-term average, so less than where it's at today. It's actually 6.2-ish. Keeping monthly payments the same, principal goes up 18.2%. 50-year term aims to reduce payments, but could increase prices. So a 30-year at 5% on $320, the monthly payment would be $1,717.83, and the total amount you would pay for the house is $618,418. So you're paying $618,418 for a $320,000 house. Your interest over 30 years is almost $300,000. 50-year mortgage at 5%, same monthly payment, principal finance $378,260, monthly payment $1,717.83, total amount paid $1,030,000, total interest $652,000. You're buying 3 houses over 50 years for the purchase price of what you paid on the 30-year mortgage.
And I don't believe that you can even, those numbers are really cool because it gives you, let's be honest, if you're asking for a 50-year mortgage, the interest rate on a 50-year mortgage is going to be higher than on a 30-year mortgage.
Well,
Because if I go to
more
the bank
stats
now and ask for a 30-year mortgage or a 20-year mortgage, my interest rate's going to be lower on a 20 than it is on a 30.
Here's the thing that I looked up earlier because I didn't know this. We have a 30-year treasury bond here that basically mimics the 30-year interest rates, and they kind of like base it on that. It's typically in this country, mortgage rates are about 100 to 125 basis points over the 30-year. So right now the 30-year is like, I think close to 5. So interest rates are a little over 6. That's kind of how they figure it out. I think 4.7, and we're at 6.2, and that's kind of how they figure it out. Well, we don't have a 50-year in this country right now, but the UK and France do. The UK has a 50-year and their 50-year is about 50 basis points lower. And France has a 50-year, and their is about 20 basis points lower than their 30-year, which I found kind of fascinating. Here's the problem, though. This is the big problem that I see. Well, there's a couple of problems, but this is one of the bigger ones. In a 30-year mortgage, typically around 8 years into the mortgage, you're in a good spot equity-wise where you can start thinking about taking an equity loan. That's where you're kind of in the safe territory.
Right.
I mean, there's a lot of factors, and it's not a perfect science. But on average, around 8 years into a mortgage, you're in a good sweet spot where if you needed to take equity out, it would make sense. On a 50-year, it would be around 20. You'd have to wait about 20 years to get into a spot where you could actually take an equity home line credit out.
How many years?
About 20. So another 12 years before you're really in a good spot.
And I can tell you that if I'm going to do things like home improvements, I get in trouble and I need to do something. I have to buy a car because my car is totaled and I need the money. My home equity has been my lifeline for when I did not want to have credit card debt. Because I always would rather have had instant mortgage home equity debt versus credit card debt.
I've seen people on X posting about how they think it's a good idea, and then saying that I think the average they used at 6.2% was something like $300 or $400 a month were being saved on a typical $420,000 house, and they were showing that if you took that $400, put it in the S&P 500 for 50 years, you're making tons and tons of money, right? But here's the problem. That sounds great today in practice, right? But there's two flaws in that ideology, in my opinion. Flaw number one is that you're assuming that your population is financially literate and is going to take that money and invest it, which overwhelmingly they're not. They're going to take that money and do something else that's not investing with that extra money. I don't know if it's take a vacation. I don't know what it is, but they're not going to invest it. Most people will not. The second problem is 10, 15, 20 years down the line, now you have people that are budgeting for whatever that payment is on that 50-year note, and it kind of just becomes the norm. Right?
Right.
So like typically somebody gets used to paying the payments that they pay, and then they craft the rest of their income around whatever their payments are. So they're not really saving anything. It just becomes whatever that payment issue is.
Here's my take on it. Like first of all, people are buying houses later for lots of reasons. Partially because because of college debt and things like that. So let's assume you're 28 when you get your house, your first house. So now you're 78 years old, and you're still paying more. You're 77, and you still have a year to go on your mortgage.
Yeah.
And you don't have income at that point. You're probably not working significantly.
What about a 40-year-old? What about a 40-year-old that buys a house?
Forget it. Well, I mean, their argument with a 40-year-old isn't our demographic for the person who wants to get this loan. That's what they're thinking. At the end of the day, it's bullshit because it is one of these things. Look what this great thing we're doing for you and how we're helping you. And it's really, we all know what it is. It's how to keep you poor, keep you working so you're
Debt
working at
slave.
Walmart when you're 75 years old. And that's what they want. They want you to work. And I don't care which guy, which gal, if it's red, if it's blue, if it's an elephant or a donkey, I don't care which one it is. They want you to work forever. They want, especially look at what they did yesterday in the Senate, this crap that they're trying to pull. It's they want you to work forever. You're being sold out. And it's like people are going to fall for this. People, the same people that are falling for one of our other topics that's coming. It's just ridiculous. And it's like you have no way of combating it because nobody wants. Well, there's a few of your media that have kind of said it. But unless you're really paying attention to this stuff, but even on X, like, I mean, I was on X last night when I got home and I saw that this had dropped. And the amount of people that were like, in my algorithm, 80% of my algorithm was pro this idea, 80%. And I'm like, either it's the robots, it's the monkeys typing.
No, people are going to, I understand. I get it because, again, the population is overwhelmingly financially illiterate. People are going to say, I'd rather have a 50-year note than a 30-year note because a 50-year note means I pay less. And people are going to think that that's good. And their payments are going to go down and they're going to have affordability for a home. But you know who wins? It's not the middle class person trying to buy a house. It's the banks.
Yes.
Because the banks are making double interest payments.
Yeah.
You're adding 20 years and the interest is going up 50%. I'm sorry, 100%. 100%. They're getting 100% more profits by adding 20 years to the note.
The only way that this makes any sense is if there was in this program, because this would have to be a program. Like if it's just being run by the banks, the corruption is just ridiculous. If this was some type of, and I'm not a fan of government programs, but unless this was something where the rates were locked in at a specific rate and they never went up or something, and they were low, like they were low interest loans or something, then maybe you could convince me that there's, for some people, it's worthwhile. But even with if it was locked in at 3%, which is never going to happen, it just isn't going to be worth it for anyone in the long run unless you're the bank. Like that's it.
How about refinancing? Will that be a thing anymore? I mean, if you have a 50-year loan and you 10 years in get lower rates and you want to refinance it for another 50 years, like what do you like? I don't understand what the benefit would be.
I bought my first house. Lived there for 10 years, had a 30-year mortgage, 1992. And then in 2002, I bought my second house. Obviously, I had some equity at this point. And actually, I think I might even have had a home equity. I think I just got approved for home equity. I didn't have anything on
And usually
it.
you go 50% LTV on a home equity,
yeah,
right? You get 50% of whatever your equity is. Yeah.
And maybe I didn't have it. Maybe I know what, I didn't get it yet. I didn't get it until I was in. But the first thing that I did was and this is the way I thought. And we've talked about this. I don't think we've ever talked about this on the air. But I said, okay, it's 2002. I'm retiring in 20 years in 2022 because I knew when my retirement day because I work for the state. I knew, and I'm like, when I go to September, because I was a teacher, and when I go to September and I don't work anymore, I don't want a mortgage anymore. I wanted my house paid off, and so I refinanced, and I did a 20-year mortgage.
Yeah, that makes
I got
sense.
a better interest rate.
Yeah,
because I was I never didn't have to be aggressive because I was able to put enough money. Whatever. The point is that I purposely did not want to have to go into my retirement and still paying for my house with no new income coming in. It just like, why would anyone want to be like, if you're anyone who's talking about, I don't want to work till I'm 90, why would this make sense to anybody? You're better off just renting. And then you don't have, better off just getting an apartment or a condo and never, ever having to cut the grass and doing any of the things like get a homeowners association thing where you don't have to worry about any of that stuff because it's not going to be worth it. It's not yours. You're never going to own it. You're probably not going to see the end of it. Most men aren't going to see the end of that loan.
yeah,
They're going to die before it's paid off.
yeah. Not to be outdone by himself. On Sunday, our great president decided to tweet something even better than 50-year mortgages. which is tariff stimulus checks. Let's read his Truth Social post from yesterday. Early in the morning, too. He got off to a good start, 7:25 in the morning. People that are against tariffs are fools. We are now the richest, most respected country in the world with almost no inflation. What a fucking liar. And a record stock market price. 401ks are highest ever. We are taking in trillions of dollars and will soon be paying down our enormous debt, $37 trillion. Record investment in the U.S. Plants and factories are going up all over the place. A dividend of at least $2,000 a person, not including high-income people, will be paid to everyone. Let's unpack that. Number one, before everybody gets excited, just so they know, so we can be factual, Donald Trump cannot press a button and just send out tariff relief checks. He needs Congress to agree and to pass that, which is not going to happen. There's absolutely no way that Congress will agree to send out $2,000 stimulus checks, if for no other reason than the fact that they will not give him a midterm win. Democrats will not give it to him. They won't do it because it's just stupid to send out stimulus checks, because we didn't learn our lesson from 2020 and 2021, which resulted in inflation. They'll do it because they don't want the politics of it, which will be fine because it shouldn't go out, because I joked yesterday, you'll get a $2,000 stimulus check, and then next year you'll go to the store with $100 and you'll get a pack of gum, a gallon of milk, and a box of cereal for $100, because prices will just go ridiculous. So obviously, markets loved when they saw this because it means more liquidity. And markets are irrational because it's all algorithms and everything popped. Because, stimulus means liquidity. Liquidity means what the video I just showed you. Everything flows to assets because they know, the algorithms know that you, the average consumer, is dumb, and you'll get your $2,000 stimulus check and you will stimulate the economy. You will not save. You will not put it into investments. And I'm not talking to everybody. The viewers of this probably would, because if you're watching this, you have some semblance of a financial brain. But overwhelmingly, the populace will just take their money and buy, rims and 40s. You know what I mean? They're not going to.
Everybody's going to buy a new TV.
Yeah, they're not going to invest it. And then the money will flow back to the top like it always does. Right. So it's just. It's not. So in this tweet, it says also, anyone received their $5,000 Doge check yet? How soon we forget that 6 months ago they were talking about a $5,000 Doge refund that was also equally as stupid as a $2,000 tariff relief check. So the Doge checks never went out.
They backed off on this today.
Of course they did.
His people already backed off on this
did.
today.
Of course.
And we're saying, no, you're not going to get a check. You're going to see it in reduction in things.
Taxation, yeah.
You'll see it because this will blah, 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 blah. And first of all, even if, and it's not true, because everybody.
You pay the tariffs.
We're all I don't care what anybody says. I can look at the numbers. I can look at the layoffs. I don't know where these plants are that being built. Some of these plants that he takes credit for have been some of them started during his first term, and some of them started under Biden, because there's always, people being paid off and in things, and there's incentives and IDA money and all that crap. So we know that there's things being built, but most of them did not happen. There's very, very few things that have been announced since he was inaugurated. So I don't know where these things are. And there's not enough money coming in that you could pay off the debt.
No.
There's just not.
No.
There's no way.
No.
It's no different than Dr. Oz saying that he calculated how much weight everybody's losing, and we're going to lose $350 billion in weight. And I was like, okay, so what you're saying is everybody lost 400 pounds. So I weigh now negative 260 pounds. I cease to exist. Nobody fact checks any of the shit that any of these dumbasses say. I'm sorry. But unfortunately, people are believing this crap.
The money flows into assets. Take a look at what I have on the screen here. The $1,200 stimulus from the COVID relief is now worth $18,614 if you put it into Bitcoin. The stimulus just inflates the supply and asset prices go up. And you can probably, if we put up NVIDIA stock or we put up Mag 7 stocks, you could $1,200 and all these assets would be worth significantly more. It's just wild that people don't understand how this stuff works. And I tweeted this yesterday with Trump, or would I tweet that? Yeah, yesterday, the day before. Perpetual debt. They spit right in your face. Fix this shit. I mean, it's just ridiculous. We're expected to be in debt perpetually. They laugh at you. They expect you to just buy all this nonsense, to be a good little consumer and save money in a bank account, like let it melt away, not buy assets, and just work really, really hard and complain and show up every 4 years and vote and think that you're doing something, and they just laugh at you. That's all that's happening. You're being laughed at. The fact that they're talking about 50-year mortgages and $2,000 stimulus checks, not even like 2 years, 3 years after we saw the after effects of the last time they did this stuff. I mean, we're literally talking about 50-year mortgages because of what inflation did to the economy and why people can't buy homes. So we talk about on Saturday a 50-year mortgage because of that problem, and then Sunday we tweet about reigniting the problem again. It makes absolutely no sense. And these are the people that lead us. These are our leaders. It's
funny. They're offering this, and it's funny. We're going to just give everybody checks, which it's funny because we were going to get 5,000 checks in February. Now we're down to $2,000 checks. And then the other one that drives me crazy is that like we just had another group of people, like college loans. Like, the college loans, how many people do you know that still are paying off college loans because they don't understand what they have to do? And people that they've let it build up for so long, because that's why it's going to take them forever to catch up, because they didn't understand that they should have been paying more than the base payment that it said in the letter. You should have been paying a certain amount to have a plan to get it down. It's the same way, like if I could pull it up. I think if I owe, what does it say what do they usually say in the window on a credit card? Like the minimum payment, like $50. Even if your bill that month is $3,000, they'll say like you just pay $50 or $55.12.
26 years.
Yeah. Rarely do I ever pay interest on my credit cards. If once in a while I flip it over to the home equity because I'd rather pay a few percent on the home equity than the credit card rate. And then I'll immediately, once I get money because I'm waiting for a check or whatever, I'll immediately pay that off and take that back off my home equity. That's how I use my equity, is to make sure I don't get hit with like some ridiculous credit card debt. But in general, that's only maybe like 4 times in 20 years. Most of the time, the credit card's being paid off. I'm not when the bill comes, or I don't buy the things.
And the consequence of the video that we showed to start this podcast out of people not understanding the system and not understanding inflation is they blame things that are not the problem, and they look for solutions that don't exist. So we get an election last week that votes in a socialist mayor for New York City, where people actually think that socialist policies in a capitalist country are going to work. It just makes no sense. And then I'm arguing with people on X and arguing with people on social media about how there's other countries where socialism exists and it flourishes. And I'm like, how many people are fleeing capitalism to go to socialism? Why don't we ever hear about that? Why don't we ever hear about the people that are beating down the gates in immigration problems of people leaving the United States to go into these socialist countries? Why don't you hear that? No, you hear about the people coming from socialist countries beating down our doors and wanting to be here in a capitalist country. So it was announced earlier today, New York icon Sbarro will cease operations in New York City after 115 years of operating in the city when Mandami is sworn in. And again, I don't give a shit what Mandami's religious beliefs. It has nothing to do with Muslim, Judaism, whatever. It just has to do with the fact that he is standing on a platform that does not and cannot work. Full stop. He already announced that he's planning on the rent freezes. And here's the kicker. This is like anti-American right here. He has stated that any landlord owners in New York City that do not comply with his rent freeze, the city will confiscate ownership of the property. Please explain to me how that's legal. Please explain to me how that's American. Please explain to me how that works. There's already been major developers of New York City who are already threatening to just sell all their properties onto the market and just leave. So you may there may be an unintended consequence of like prices coming down because people are just going to get the hell out of Dodge and just sell, and the market's going to get flooded with inventory because people don't want to be there. It's wild. The fact that people think socialism can work in of all places, New York City, the capital of capitalism, they think that that's going to work. Like, it's going to be an absolute nightmare. And us here in upstate New York, like, for decades, we've been at the mercy of bad policies that have happened in New York City on a smaller scale. I can't imagine what it's going to look like once Mandami takes office and starts to implement or attempt to implement some of these terrible policies, and what happens there and the knockdown effects that are going to happen in upstate New York. I don't know. I don't know what you think, Rich. I think it's going to be absolutely terrible.
I mean, I think some of the stuff is pie in the high sky stuff that's not going to happen. I think Mandami, first of all, the same reason he has charisma, and a lot of people like his charisma. And most of these guys that get elected, let's be honest, it's who would you rather have a beer with? That's an old adage in politics. People liked Donald Trump's charisma. They liked Ronald Reagan's charisma. They liked Bill Clinton's charisma because he played the saxophone on the Arsenio Hall show. Like, this is how we vote. This is how we pick people. We don't pick them based on their policies. There are people that are very extreme, and New York. The problem with New York is it's been run by the policies in New York. It can't sustain itself. There has to be some way to address some of the things that are going on in New York. Like, rent is ridiculously high, and I don't pretend to have a clue what it is. So I think him getting elected is out of that level of frustration. And I also think his candidate, the person he ran against. I mean, a lot of people just were sick of Andrew Cuomo and everything that he stands for because of the stuff that he did. And then, like, he was saying, well, the reason why the rent's high is because of New York State. It's like, dude, you're the fucking governor. Like, so there was definitely a bunch of people that came out and voted because they were just sick of Andrew Cuomo. And so we'll see, and it's like, it's probably going back to, I'm trying to think of like, some of the problems that New York had in the 70s, when you think about the scene with the blackout and Son of Sam and that whole time period when, the city was run very poorly. And we'll see, what he does. And if some of these corporations, the problem for some of these corporations is you kind of need to be in New York. Like, I know you can do stuff on the internet and all that shit, but it's going to be interesting about some of these companies, like a pizza company that they haven't even had anything happen to them and they're moving already. Like, why? What did he change on day one? Now, if you want to say 3 months in, 6 months in, we're out. But I just, I don't know. I just kind of feel like it's kind of reactionary. There's also a lot of people that said they were going to move to Canada, and Canada said, no, you can't move here. So we'll see. We'll see what happens. I don't know.
I was scouring Twitter as you were speaking, and I had to look this up to make sure I didn't say something that wasn't being reported. I can't believe this could be true. I don't know. I'm looking AF. What is? I'm seeing this on my feed. I don't know if this is true, so I'm not gonna state it as fact. So I'm just gonna report what I'm seeing, but I can't believe it's true. I got to do more digging to see, but people are saying Trump is considering the creation of a 15-year car loan in addition to the 15-year mortgage.
That has to be
It's got to be satire. It can't be real.
Like that can't be.
There's absolutely no way
that's got to be just like a fake.
What is the A? Is this parody? It's got to be parody. Is this a parody account? America First Post. That can't. There's no way.
If it is, if anybody thinks, oh goody, like that's hilarious. But I mean, like, just do the math. Just do the math of your age. Anybody out there that thinks that a 50-year mortgage makes any sense, it's 20 years beyond when you probably wanted to retire. You're paying for the house with no income source 20 years after. I mean, and aren't these high risk loans? Right? If I'm a bank, do I want to give this loan out? Like, they're not going to see the end of it, right? Like, they're going to end up owning a bunch of houses in 40 years because everybody's going to be dead. Like, because they didn't get to pay it off in time. Or are you going to, I guess if I inherit my parent, I would just tell my parents, don't leave anything to me because I don't want to inherit your debt. Right? Don't leave the house to me because then all of a sudden I'm responsible. I'm going to have to be paying off my 50-year mortgage and the rest of my parents' 50-year mortgage and my 15-year car loan.
Why do we not just address? Why can't we just address the problem? Like, why do we keep doing all this nonsense? Like extending out loans and making people pay for more. Like, it doesn't make any sense. I'm seeing it. Unusual Whales, and their Unusual Whales is. Let me make sure this is the right account. 2.6 million followers. He's legitimate. The U.S. Trump administration is reportedly working on 15-year car loans. U.S. President Donald Trump also posted yesterday regarding allowing 50-year mortgages. Do you know anybody that owns a
15-year-old car?
I can't believe, like, we're living in complete simulation at this point. I can't believe that. Dude, I mean, he's outdoing himself.
Sure that was going to be.
I thought it was fake. There's no way. I was. People are just like memeing at this point. But like, if they're really floating 50-year mortgages, $2,000 stimulus checks, in 15 years, like, we have learned absolutely nothing. And the people I've argued with for 2 or 3 years in MAGA, telling them that there isn't a fiscal conservative bone in Trump's body, and they're trying to tell me MAGA is, gonna change lower the deficit, and he's a conservative fiscal. It's like, what are you talking about? What in God's name are you talking about?
You know what this is, and I think this is all the same stuff because it all comes down to distraction. So the two things I always say all the time. The first one is bread and circuses. That was the philosophy of the Roman Empire. We're going to feed you, and we're going to give you entertainment, bread and circuses. So you won't be distracted from the fact that you're being oppressed by an empire. So I always joke about that. So that's the term, give them bread and circuses. And that's what they do to us. Like Twitter, all this stuff. They say we want to hear. We get all these things that are this, we're going to give you these great loans, and then you can have a brand new car. I don't know. I don't understand how the 15-year, like, you're gonna. I don't understand it. And then the other thing is always, like, the other one is just like what I call Wag the Dog. Wag the Dog's another thing. There's a book in the 90s that where presidents will just create a story to distract you from something else. And that's what this is.
Can you imagine the interest on a 15, like, you're paying 5 years is the loan typically right now, right? 60 months, 5 years. That's 3 times the length. Can you imagine? You could buy like 4 cars.
You know what you will, because 3 cars at least 3.
You
know what phone call I got today?
I'm literally
before I
dumbfounded
came
by that.
here. I got a call from my car dealership. Literally, I was on the couch getting ready, putting my shoes on. My phone rang, and it was my car dealership wanting to buy back my car, saying my car. You know what my car is? It's not nice. It's in very high demand, and do I want to come in and get a new car and refinance because it's so in demand? Like, get out of here with that. They want me because I have 2 years left to go on this loan, because I have 2 years to go on. Well, under 2 now, but I have 2 years. So they realize in 2 years they're not going to have any money coming in.
It's 180 months.
Yes.
What the hell? What would your payment be?
Oh, it doesn't matter because you're paying it forever.
What in God's name? You know what? I can't take anymore. We're gonna just end it. We're gonna end it there because this is just blowing my brain cells away. As always, ladies and gentlemen, thanks for watching. Please click like, subscribe, and all that stuff because I always forget to do that. now more than ever in this crazy matrix simulation world that we're living in. Don't trust, verify. Thanks for watching. See you guys next week at 6:30 on Monday. Peace.